Hi there, and thank you for joining us for this episode of PhillipCapital's Market Watch. I'm Paul Chew, Head of Research at Phillip Securities Research. In today's episode, we'll take a closer look at our strategy for 2025. In the past, we talked about don't fight the Fed, but now it's all about don't fight the Trump. Let's dive right in. But first, let's recap 2024. Singapore's equity market enjoyed its best annual performance in 7 years, with a return of almost 17%. We were just shy of all-time highs, with bank stocks leading the way with gains of 34%. If we include dividends, returns would have soared to nearly 40%. Transport stocks also performed well, driven by higher volumes and freight rates. However, REITs suffered from the weight of rising interest expenses and challenges in China. Looking across major asset classes returns in US dollar terms, Nasdaq was the leader, followed by gold. On the flip side, interest-sensitive assets such as Singapore REITs and bonds were the worst performers. We now move to the policies we expect from the new US administration. Tariffs are back in focus, not just as an economic tool, but also a political one. These import tariffs will likely be negative for global growth and places pressure on the currencies of exporting countries. No nation will be spared. We think the new US administration will continue to expand its fiscal deficits, mainly through tax cuts. Over the last decade, the average deficit was US 1.1 trillion annually, but this could double to US 2.1 trillion in the next decade. While this adds to debt, it remains a key driver of US economic growth. Energy policy is another key area. President Trump is pushing for lower energy prices, with US oil production set to rise due to deregulation. However, the risk of sanctions on Iran and Russia could disrupt supply. Nevertheless, higher US production and excess capacity in Saudi Arabia and the UAE should help to stabilize any near-term supply dislocations. We have 3 themes that we believe investors can benefit from in 2025. Firstly, inflation in the US is trending down faster than expected, especially in housing costs, which is the largest inflation component. Base effects from high inflation in 2024, especially in first quarter 24, will also play a role in driving numbers lower. While tariffs could trigger a spike in inflation, we believe any impact on inflation comes with a lag and weaker exporting country currencies offsetting rising import prices. Our second theme is the re-rating of China risk. We are cautious about China's economy as residential construction activity continues to collapse with a lag in line with the drop in units or space sold. Property and related sectors make up around 30% of the country's GDP, and any setbacks creates a huge hole to fill. Nevertheless, there is room for optimism. We believe the presence of political donator Elon Musk and President Trump's willingness to collaborate with China may soften tariff impacts. Other initiatives like a fentanyl export ban and shared ownership in TikTok could also ease tensions. Our third and final theme is corporate restructuring, which offers opportunities for investors. For example, Keppel will look to dispose of its rigs, Singtel selling some of its stakes in Mobile Associates, Singpost completing its Australia business disposal and even property assets, and Olam disposing or listing its subsidiaries could create significant returns for investors. In fact, our team's model portfolio of 10 Singapore stocks is focused on dividend yield, growth, and re-rating for absolute returns. Our recent inclusions include CapitaLand Ascott, OCBC, and Weher. To conclude, 2024 was a memorable year, with the market coming just 2% shy of our 17-year high. Navigating 2025 will be daunting, as US policies will be unpredictable. Yet, we believe the 3 themes of lower rates, China re-rating, and corporate restructuring will be a source of returns for investors. Thank you for tuning in to this episode of PhillipCapital's Market Watch. Do like and follow us on social media and subscribe to us on YouTube for more insights. See you in the next episode.